Well, hello everybody, I'm Ellie Little, and this is your weekly NeoTA wrap. We take a look at these markets, we do it from a neoclassical perspective. Each time we ask ourselves just one question: what happened last week? And what does it tell us about the coming ones? Do this show every Sunday evening, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. It's under the channel L.A. Little. Subscribe anytime content's pushed. You're notified not only the weekly shows, the daily shows, but also the morning broadcast where we look at the short take on a particular industry or sector or individual stocks at times. Those show up here. Notifications also go out on those as well if you subscribe. As far as these markets and what happened, it was a down week for the most part. Nasdaq was flat. The Russell outperformed, was up on the week, but we had declines elsewhere. If we go and look at the markets to see what's happening there, we start with the S&P 500. And if we're looking at it on the daily chart, what we're starting to see is that same thing we've seen before, and that is that breakouts cannot hold. They come drifting right back in. This one actually broke a swing point low last week on the daily chart, transitions to sideways as a result. And if we look at it on the weekly chart, what we're going to see there is that bullish retest regen is failing, and that is this little high. We broke over it here. That was what this arrow was for. Now we're back underneath it. More than likely, this is telling us that this market once more is sideways, not on the upside. So we're probably going to see more range trading, which has been what this market has done pretty much all year long. So you got this range up here, you had the range below it, right? And now you got the bigger one down below that as well. And actually, if we were going to draw that more accurately, it probably would be here, and then there would be one underneath it. So these ranges continue to expand, right? And we've seen now over the course of a year, one after another, you get these big pullbacks inside of them. So you get a decent pullback here, a real pullback on October last year, another one at the end of the year in December, another one to test that at the beginning of the year. Then finally, the best two runs, right, were off the October low in that test. And ever since then, it's just been clawing higher, and now it's starting to give it up again. What does that tell us? Well, it just tells us it's range trading, right? I mean, it really is a range trade. If you're not trading the ranges, then you better be in some strong sectors, because the general market is not going to lift your individual stocks for the most part. And so that's the setup. That's what's happening. That continues to happen. And as I said for a while now, it's really not what's happening here, but what's happening elsewhere that's driving what's happening here. And I'm talking about currencies, I'm talking about bonds, and I'm talking about other indexes. And I want to pop into some of those other indexes to start the evening again. In particular, if we look at the All Ordinaries in Australia, that one breaking down, you can see it breaking down here. You can see it has broken down now on the weekly time frame. So this had a bullish retest regenerate. That failed, right? You're underneath it. That's telling you that this market no longer is in an uptrend, but is in a sideways trend at best. We knew that from a couple of weeks ago, actually about 4 weeks ago. Now we get confirmation on the break of that swing point highs low, which does tell us that the run really is over. That's the All Ordinaries. If we look elsewhere and just keep going around, my friends over in India, they always want to know what's going on there. I think this one's still going to try to go lower. This is the Sensex. If we look at it on the weekly, the bars I keep talking about are over here. That's where it wants to try to get back to. It's got to break down first. You got swing point lows here, 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 and here. I suspect it's going to start testing them all before it's over. That index wants to go lower, and as I've talked about before, if you look at it from the old classical point of view, you kind of have the head and shoulders, and that head and shoulders projects you back into this area. So let's actually, it's a little deeper, it's back into there. Let's see if it breaks in terms of the old classical move. Does it break this neckline and head lower? Right now, you can look at these things, and it's always kind of interesting to me. You can look at these things differently, right? You can look at them as just ABCD structures. You can look at them as head and shoulder patterns. It's all the same. They usually project about the same. You can see that head and shoulder, that ABCD structure taking place again here. If it fulfills, it's going to take it right into the top of that bar. And that, for me, is probably the sweet spot. That's India. Looking elsewhere, let's go up to my friends in Canada. This one also looking like it's about to break down farther. Let me grab the Toronto Exchange here. Breaking down, it's coming down to the swing point low. This is on the daily time frame. Testing it, looks like it's going to break to me. That's going to bring it back into this big bar from December. More than likely the top. That's around 14,500. Looking over at some of the countries we don't look at that often, but should probably, is Korea. Korea also breaking down, goes to a sideways trend on this break, goes to a bearish trend on this break on this time frame, the daily. Pull it back, doesn't look nearly as bad, but it's coming back in to do its bullish retest regen, and that's off this prior bar. So you're within 6 bars, you come back, now you're doing a second test. That throws your probabilities into about 60% at best. Going to try to test these lows more than likely on this move back down. Now on a longer term basis, it's not so bad. You actually have little ABCD structures that have been completing on the way up, right? And those structures, as they completed, and then you got this elongated move, right? Kind of a spike move, volume expands. That's the same thing we've been seeing everywhere else, and that is hey, this is a range trade. That range off of this bar, project it forward, that range is up there, and project it down, the range is back here. So where can it trade to eventually? Well, more than likely it's going to test this area, which is that middle range. If it gets underneath it, right, then it can test the lows. But more than likely, this on Korea, if you're trading this market in this market, and I know I have a few friends there as well, that's probably the sweet spot on the pullback. Looking at Taiwan, we haven't looked at Taiwan in a while. Taiwan actually broke down. Now Taiwan has broken multiple swing points on this time frame, and we're looking at the daily. That puts it into a bearish move, volume expands, big wide price spread bar. This is going to be hard to recapture now. That tells me that more than likely this market also has moved into a sideways trend. If we look at it on the weekly time frame, you still have the bullish retest regenerate taking place, but you've broken a swing point low here and you've broken one there. That puts you into a bearish trend on this time frame. Taiwan, Taipei, which is chip country, right, which is kind of an interesting scenario, because if you're thinking about chips and how well they're doing in the US, and then you look over here and you see just how well they're doing there, they're not doing nearly as well. This looks like serious resistance now on the way back up. More than likely, Taipei going to try to trade back into the bottom of the range before it's over on that time frame. Moving to those that influence us the most, it's mostly about Europe. Range trades here as well, and they're at the bottoms of those ranges. So if we draw these out, you got this big range and then another one inside of it. We're looking at the CACs on the daily time frame. It's down here testing the lower end of that range. If we pull it out, you can see this had a huge run to the top side, and now you're coming back and making the range trade, right? And that range trade at this point still holding in the top half. But if you draw this and you project it down, right, if it doesn't hold here, then what does it do? It comes right back into the retest regen off the prior swing point break. That would be the second test after a long steady move up. More than likely that would be a great spot to try to pick things up if it wants to come that deep. But right now, it's still in the upper range, and this week is going to be a good test. You've got the Greek situation taking place over there. You've got a bond yield, and we'll talk about bonds here in a second, but the bond yields have gone up. The risk of the Greek exit is becoming more real. It's only 2 weeks away now. They've grouped their payments all on the June 20th date now. So they basically have 2 weeks to figure out what they're going to do. More than likely, that keeps us in a range trade until that comes to a head. So I would expect you're going to see this one try to bounce, and you're probably also going to see the German market try to bounce. Here's the German market, tested the low, 11,167 was the low. You got the 11,155, but you close over to 1197. And so this, to me, looks like it's going to try to bounce come Monday. Now, on the opposite side of the equation, Shanghai. Shanghai, we had news come out on Friday where they're going to try to do some more reforms there. They've got some issues with margins, trading, and potentially also looking at the short sells. This one gets over the high, has less volume. Wasn't a swing point high, so there's no read on it from that perspective. The real question is, will those announcements, whatever they are, where they put pressure on this or not, or will this thing just continue to trade higher? This index up over 100%, about 130%, I believe, at this point. Here's the monthly. We went from, let's just take this low, 2,000. You're trading at 5,000 now. That is what, 150%, if I'm reading that right? The thing I would be concerned about here if I'm a trader is how much farther can this go? You've got an ABCD structure on the monthly, right? That looks to me like it's just about done. And if we look at it from that perspective, the projections on a monthly basis are about 5,800. This is trading at 5,000. So you could still get another 800-point run out of this thing. When you got this kind of extension, yeah, you can get big numbers. At some point, you're going to see a 10-15% drop in this index, and that's when the world's really going to take notice and they're going to say, hey, that run is over. It was all fake. You're going to get a big pullback. The crash is coming. You're going to hear all that kind of stuff, right? I doubt that's probably going to be the case. I think more likely the case is going to be, if you pull this on a weekly, is you're going to see a fairly significant drop, and then it's going to be the retest that you want to watch. It's always the retest. So, let's just say this was the high. If it were, then this bounce here would fail, and that would be where you'd get your pullback. Okay, so didn't do it there. What is it going to do up here? Is it going to pull back here? No, doesn't do it again, doesn't do this. Instead, it keeps going. At some point, the bounce will fail off of a pullback. That will tell you you're a range trade to start with, potentially a top. That's almost always the way these things play out. Looking elsewhere, we have extreme strength still in the Japanese market, the Nikkei. This one's still trading over the highs. It's more than 6 bars. This is going to be a buy. I talked about it last week. It's going to be a buy when it comes back into this area. I suspect it will as soon as the yen settles down. Right now, the yen continues to be demolished to the downside, which is kind of a good segue into the currencies. So here's the yen. So you were trading in a consolidation range after a big move down, then break. Now you're breaking again. This is, of course, what's keeping that market up. Note the extreme move again already. So you've moved essentially $4 or 4 points from 81 to 77. Percentage-wise, that's 5%. That's a big move in currencies, right? Where these things are magnified if you're trading the Forex. This is going to, of course, find its home down here somewhere. But you can see before a huge move down before you got the bounce. So in other words, if we just take the last time this happened, you went from 95 down to 90, then you got your bounce. Well, now you're going from 81 down to 77. I would think you're going to get a bounce in here somewhere. That bounce more than likely will do just like what it did before, and that is it will come back up towards the breakdown area and it will fail. And so this one I would expect gets almost back to the breakdown area, probably into this little zone right here, and that's where it's going to fail once it bounces. Because it broke on multiple time frames, you expect 2 to 3 bars. You got 2 in effect already. The next question is, do you get another extension down? I wouldn't be surprised to see it extend a little bit farther and get some sort of a bounce. Then of course that will pull that Nikkei back in and offer the opportunity for those who want to trade it to add to positions or create new positions. Looking elsewhere, the other big piece of course is the euro. If we look at the euro, the euro has the large move back up, right? Let's pull this back to a weekly so you can see it. There's a large move back up, but this is on the heels of a huge move down. So what is this doing? This is doing the same thing, right? It's building out some sort of a range to the downside. It can trade up probably this 118, 119 area. That was the breakdown on the monthly chart. So there is the potential that you could have an ABCD structure here taking place that could get you up into that area, which would probably be the final move before the continuation to the downside. But there's nothing that says it has to trade that high. It could trade just this range that we already see, break down from there, and do the continuation move to the downside. Eventually, this euro is probably going to trade lower. Why do I say that? Well, because the friend is your trend, right? I mean, the trend is your friend. This thing is trending down. Yeah, you can get bounces along the way, wherever they are, whatever their sizes are. But eventually, that trend should try to continue, and if so, then that means more downside. These are long-term moves. They take a long time to play out. You've got QE in Europe. QE's not going away. If anything, it's going to get more. There's going to be more of it. That's what Draghi's telling you. And if that's the case, that's going to put more pressure on this currency. That's their ticket to paradise, right? Currency on the pressure on the currency. It's just what the Japanese are doing. It's what the Chinese are trying to do. That's what everybody does. That's how you get your currency to move, or actually your country to move. Let's go to bonds, because bonds have been selling down. The German bonds themselves, the TLT here, the long end of the curve getting hurt. We have a breakdown in the bonds. That breakdown took place off this swing point low. It broke under it here, turned it bearish, came back up to do the retest regen. This is a bearish retest regen. I'm on the daily charts. Came back up to do that test and failed to get over, right? Which is a success on the retest. In other words, it's bearishly projecting lower prices. And so that is, well, it can cut both ways. It's saying interest rates are going up. The expectation in Friday, the employment number is what drove this back down. Expectation you have to have is that it's going to test this low again. If it can bounce from there, then this thing can set up some sort of a consolidation range for the time being in this area. But if it doesn't, it's going to break lower. And I want to show you here on the weekly, it actually closed lower finally than this big bar from October. And to me, that's probably the biggest tell out here. Get the line straight. That puts it in a reconfirmed bearish trend. That suggests that you're going to get the ABCD structure to the downside most likely. And if so, that's a big move down. It's going to take you way down here. We haven't seen that kind of move in bonds in a long time. And talking about the long time, let's look at the long-term time frame. If it does that and you get that projection, it takes you back into the intersection of these two bars. That's around 108. That's a big move down. It's not the end of the bull market potentially in bonds, but it's certainly a big setback. Bonds have traded in wide ranges. It looks like it's trying to do it again. You really wouldn't have the end of this trend until you actually broke swing point lows. Those are there. That's going to be the price point. This intersection is that swing point low. If it does trade down to that, that's going to probably suggest pressure on the U.S. markets. And it's probably going to suggest some sort of fear coming into this market, in addition to interest rates rising. Now remember, interest rates are rising from very low levels. That makes the percentage moves very large. These markets have thinned out because there's not as much supply to be buying, or there's not as much demand to be selling. It's true here, it's true in Europe. It's a factor of all the QE that has taken place and continues to take place. And it's a factor of the regulations that have taken place where a lot of these brokerage firms are not involved. Not the brokerage firms, but the big banks are not involved in this market nearly to the extent that they were before. The problem with that is if you start getting larger moves that do not stop, then you can actually get the fear factor really ramped up, and I suspect that it's the bonds that are going to move these markets in a larger way when they move in larger ways. And so that's something we have to keep in mind here. The bonds could be foretelling us increased volatility is coming our way. Not yet. I'm not convinced of that yet, but it is something to consider and to keep in our minds. So this week will be a big trade on the bonds to see if this continuation, ABCD down, does in fact start to escalate. All right, so that's a big picture view of what's happening in the markets. I want to pull back and come back to the general markets right quick, and I want to bring up two other factors. One is the relative strength that has been taking place in the Nasdaq. This is a big reason this market continues to hang up here. You know, the Nasdaq's not giving it up, and a big reason for that, I suspect, is because if you look at this on a quarterly basis, long-term basis, and go back to 2000, it was January 3rd, 2000, that quarter, you know, which was, you know, from the first to the third months, is where the highs were set, 51.32, 52. We've got as high as 51.19. Folks, we got within, you know, 20 points, less than 20 points, 15 points of the high. If you get that close, you almost have to believe this thing's going to set that high before it's over. So this bar, that's the bar that has the volume on it. If you bring this back and look at it, that was where the volume was. It still wants to test that bar. It won't give it up. When it tests that bar, and especially if it tests on the long-term time frame, and I'm talking about quarterly charts here, that high, and then starts to fail, that may finally be, quote-unquote, the top. Everybody will be talking about a big double top. You know, come on, double top after 15 years, I guess that's possible, but, you know, that's the way traders think. And if they do that, and if that does happen, you know, then you're going to see all these classical technical traders, you know, these trend lines, they're going to break, right? And then a lot of people do fans, right? And they'll do the fans out and so forth. You know, all that stuff. What matters is what happens here. Do you test this top? Do you have new buyers at higher prices or not? If you don't, this market's going to come back in. If you do, it can continue. I suspect it's going to fail when it gets up there, and we're going to see it probably test that 2000 top and come back in, and then the fears maybe get fanned at that point. Not quite there, we're getting close, but that's something to look forward to if you like that sort of a big picture type stuff. And if I draw those trend lines, you can see, and actually, you know, I mean, you can draw them from anywhere. That's the problem with these. But if you draw them this way, you can see you're kind of coming to the pinnacle here, and that test could take place within this big wedge that's going on. And that's how the classical folks are looking at it. And you know, unless it surprises me, I suspect the test is going to be that top, and it's going to fail. And given that we're talking, you know, less than a, you know, 1/10%, it probably is going to test that 2000 top as well, and that may be the actual top in this market for a while. That's it for tonight. I will leave it at that. I think the places you should be looking overseas, how do they trade this week? My guess is that you're going to see China try to pull back, but it could surge if they can't get the pullback. Japan's still going to hold. Germany, France look like they want to bounce. That's probably going to allow the U.S. markets to bounce again in front of the Fed meeting that's next week, right? And in front of what's going to happen in Greece. The week after, probably more pressure. That's it for tonight, folks. Thanks for joining me. Take care, and I'll see you next time.